Is the next big debt crisis happening right before our eyes? Because we're seeing a mass of news articles come up about Evergrande Group. And this is happening after it was made public that they are in serious financial trouble. And the kicker is, this company is so large that the global economy could feel the shockwave if they were to default. And this is because Evergrande owes over $300 billion to creditors, threatening to destabilize China's entire economy. Now, because everyone on Twitter has piled on with their hot and spicy takes here, I want to take a minute to help you stay on top of this issue. And this way you'll know how to change your investing strategy, if at all, or if it's necessary to really be concerned about this situation, because we have seen issues like this before. And I know I'm not the first to report on this, but I wanted to take my time here to really understand the situation before making a video about it. So China Evergrande, what happened? The China Evergrande Group is a holding company. They're particularly well known in China and throughout the world by investors as a real estate developer. To paint a picture of their scale, their assets are estimated to be worth roughly 2 trillion yuan, a little bit over $300 billion. That's more than all of Lord Bezos's net worth. That is an insane number. To illustrate this massive footprint, here are a few of their assets. They have over 200,000 employees and support more than 3.8 million jobs in construction and other industries. All of their properties combined add up to 680 million square meters, about 262 square miles. That's more land size than some entire countries. And would it be a gigantic Chinese conglomerate if they didn't own an electric vehicle company? Well, they do. Evergrande New Energy Vehicles is developing 14 electric vehicle models. That's 3 times more than Tesla has. And they have a streaming platform, a production company, theme parks, a bottled water brand, and even their own football club. And the list just goes on and on and on. All of their offshore and domestic subsidiaries combined come up to 2% of China's entire GDP. They are massive. Now, the problem with Evergrande started in September of last year, when the group wrote to the Chinese government that repayments of debts that they owe could dry up their capital, placing them in a very tough spot. At this point, 3 of their major investors agreed to delay repayments of the group's debt, which calmed things down for a little while. Evergrande was able to continue to keep the lights on for some time. But in September of this year, things changed. In a stock filing, they stated, quote, "There is no guarantee that the group would be able to meet its financial obligations." These financial obligations are basically people that they owe money to. Consumers who bought Evergrande's wealth management products, basically lending the company money with a promise of a high return. People who bought homes and were convinced by agents to fork over even more money to buy into corporate bonds. Evergrande employees who were pressured into loaning the company money. And it's gotten so bad that the company has offered to give private investors apartments as a way of paying off their debts. But again, with 1.6 million apartments that they already owe to buyers, this sort of a promise doesn't mean a whole lot. Now, you can see why investors are worried. This kind of crisis looks and feels like the Lehman Brothers collapse of 2008, which created shockwaves across the global economy. There's so much borrowed capital at risk here that a default of this magnitude would affect corporations around the world. The question is, how much would it affect them? Now, this story is continuously being updated, but I want to help you understand what the risks truly are here and if your investment strategy will be affected by the worst case scenario. So let's talk about the potential worst case scenarios. The first major repercussion of an Evergrande default would be a credit crunch. You've probably seen this in the news, but let's break this down. A credit crunch is an economic condition where banks aren't able to give out new loans because nearly all of their money is already tied up with other borrowers, just like Evergrande. Most businesses need to borrow capital to do their work and to remain competitive. But when levels of debt are so high that revenue isn't able to keep up with paying back banks and investors, a company runs risk of going bankrupt. And this is what's happening with Evergrande. And then when you have huge companies like Evergrande who default on their loans, it prevents other businesses and other consumers from taking out loans and contributing to the economy. This is how recessions can happen. And this is one of the potential reasons that an Evergrande default is being compared to the Lehman Brothers collapse. But I think it's important to explain why that happened. So the 2007 and 2008 credit crunch occurred because of actions of US lenders, which was basically a combination of abusing the system and total short-sightedness. Money was lent in that period to basically anyone and everyone who wanted a loan. And many of these borrowers were either low income or had shaky credit history. This is called subprime mortgages. But because selling these mortgages meant more income, many brokers went and just sold the mortgages anyways. And it stands to reason that these lenders were taking on huge amounts of risk by lending money to people who weren't likely to pay back their debts. The reason why that risk wasn't immediately concerning to lenders was because the mortgages that they were selling wouldn't be their problem for long. Mortgage companies would secure a loan and then pass the debt on to other finance companies, essentially spreading the problem of bad mortgages out to many, many businesses throughout the entire economy. This eventually resulted in a critical mass of mortgages going bad, U.S. mortgage lenders going bankrupt, and banks sustaining massive losses in the billions. Now comes the credit crunch. With so much capital lost to subprime mortgages, banks were not able to lend out money, or they were at least unwilling to do so, given how confidence was lost and how high the interbank lending fees had gone up. Then when a credit crunch of this scale happens, like it did in 2007, 2008, economic activity grinds to a halt and a recession starts floating in like a dark cloud from the distance. Now, could an Evergrande default create another credit crunch? It's definitely possible, but it's far from guaranteed. I saw a comment on this that sums it up pretty well. And that comment was, if you owe the bank $1 million, it's your problem. If you owe the bank $300 billion, it's everyone's problem. And it's important to point out here that Evergrande isn't the only company in China or even the world that is swimming in debt right now, as debt is basically as cheap as it has ever been. And this is all just adding gasoline onto this economic dumpster fire that we're all witnessing. And the real problem here isn't so much Evergrande, but the reckless borrowing that has been abused by big Chinese corporations for the last 2 decades. The failures of big companies like these are partially due to high-risk shadow banking activities where corporations create their own wealth management products that work outside of government regulation and traditional banks. As of December of 2020, shadow banking in China is estimated to be worth $12.9 trillion. And this has prompted the Communist Party of China to bring in new policies to significantly reduce risks to their economy. Now, we have to mention that China's government is pretty notorious for bailing out large companies that are too big to fail, but we're not sure if this is going to happen this time around. And while this level of intervention has been helpful at constraining the fallout of conglomerate debt, it also condones corporate behavior that makes default more likely. They're more likely to take huge risks if they know the government is going to come in and save the day. Now, the second possible fallout from the Evergrande dumpster fire is called Contagion. Now, this doesn't have anything to do with the pandemic, at least not directly anyways. But contagion refers to when fear and uncertainty associated with one company spread to other companies within a similar industry and potentially beyond. It's a viral outbreak of fear and distrust. And when $300 billion is on the line, you can expect the market to look closely at the numbers, project how a loss of this size could affect other institutions, and then probably overreact a little bit because that's what markets like to do. And the real problem, the issue isn't just isolated to China. So now that property and real estate developers have come under scrutiny, investors are looking at the financial institutions with money invested into these companies. Apart from Chinese banks, Evergrande also now owes money to foreign hedge funds like Saba Capital Management, Redwood Capital Management, Silver Point Capital, Contrarian Capital Management, and many more. But it's worth noting that those creditors have experience in buying into companies with distressed debt. It's difficult to imagine how Evergrande could pull off a positive outcome here, especially by the end of the year. But so far, they've actually been able to raise about $8 billion as of August by selling shares in their EV unit. So you never know. If they manage to make this work, this is going to be a bigger comeback than, than Logan Paul after that you know what video. Now before you start closing all your positions and knocking out Granny's gold teeth to sell at a pawn shop, I want to tell you that this issue is most likely not the global economic disaster that some people want you to believe. I get it, it's a real estate company, it's valued high enough to be compared to the Lehman Brothers crisis of 2008, but the circumstances are fundamentally different here. The Lehman Brothers crisis happened as a result of very specific market conditions in real estate. Prices of homes were going up in the United States, and many speculators were buying and flipping these properties just to sell them at what seemed like an inevitably higher price every single time, higher and higher. And this caused a kind of FOMO in the real estate market, which pushed prices even higher and higher and higher. Because of such high demand, banks were quick to issue these crap loans that didn't require much for background checks or good credit history or a good history of income, making it easier for people to buy these homes, even though it was very likely that they'd default on those mortgages. So the circumstances here are just simply different. There isn't a housing bubble per se, not in the same way at least. Now don't get me wrong, I'm not saying that this situation is good, especially for people in China that trusted Evergrande to deliver on investment returns, or those who bought apartments, in some cases with their entire life savings. But there's still a lot that would need to go wrong before the whole world is extremely impacted by this debt crisis. So how do we get out of this? One way out of this crisis is through government intervention from China. Of course, like we mentioned earlier, this is a bit of a double-edged sword. The People's Bank of China has already injected $14 billion into their banking system to help boost confidence of investors, but they haven't directly invested into Evergrande, at least yet. Another way for the company to move forward is through a benign takeover by the Chinese government. This would mean the Chinese state would have more direct control over the finances and operations of the company to help steer clear total default. Still though, given Xi Jinping's reluctance to provide corporate bailouts at this point, it could go either way. I mean, Evergrande has $669 million in payments due before the end of the year. Now we need to figure out who should be worried. It's definitely not time to panic. Even though the stock market reacted negatively to this, confidence seems to be picking back up after the initial shock. There still is a bit of FUD going around because of the scale of this company and the possible repercussions that the financial system could have globally. And this isn't financial advice, but unless you have direct exposure to Evergrande or other property development companies in China, you probably don't have an urgent need to reevaluate your positions, whether that be in stocks or crypto. Even if the outcome for Evergrande is a liquidation of assets, the likely path forward here will come from policy changes that the Chinese government will put into action to better manage how enormous companies like these are permitted to use debt to help prevent this from happening again in the future. Events like these happen, and corrections are inevitable. But remember to keep your goals in mind and remain rational while others are running around screaming. And I'd like to thank you for watching, and I hope you have a profitable day.